Right, time for business now with Kate Moody. Hello, Kate.
Hi, Michelle.
Now, let's start with the latest in Apple's dispute with US authorities over its security policies. More tech giants rallying to its side.
Yeah, Apple hoping to get by with a little help from its frenemies, you might say, Rochelle. Now, we've already seen Google, Facebook, and Yahoo come out in public support of Apple. eBay, Twitter, LinkedIn, and Airbnb are now the latest to officially side with them, arguing that Apple shouldn't be forced to help the FBI crack the security settings on the iPhone that belonged to one of the gunmen from the San Bernardino shootings last year. Now, more than a dozen tech firms have filed what's called a joint amicus brief. That means a friend of the court. It's a letter that supports Apple's case. It says that consumers will lose confidence in their tech providers if they're forced to break their own security measures. At least 3 separate groups of tech companies have now filed similar motions, setting up what could prove to be a very long battle indeed between Silicon Valley and Washington.
Okay, one that could drag on. Well, tell us how the markets are faring this Friday.
We saw a fairly muted session in Asia, the major indices crossing back and forth over the flatline throughout the session. So the Nikkei, Hang Seng, and Shanghai Composite rallying a little bit there. You can see Chinese stocks ending in the green for the 4th day in a row. European markets just opened a few moments ago. A positive start for the moment. The major indices up about 0.5 percentage point each. The big mover on Friday is going to come from Washington. The U.S. Labor Department due to release its February jobs report. That'll give an indication of how the world's largest economy is doing and give some guidance about the pace of interest rate hikes to come.
Okay, well, the world's second largest economy, meanwhile, is holding its biggest political event of the year, which will also set economic guidance for the coming years.
Yeah, one of the top items on the agenda for the National People's Congress is going to be rubber stamping Beijing's annual budget. It also coincides, though, with the next 5-year plan. That's the official economic blueprint to see the country through 2020. The slowing pace of growth has raised fresh concerns about the government's policies and reforms, as Josh Vardy explains.
As China takes its first steps towards structural reform in the face of slowing growth, uncertainty shadows the country's latest 5-year plan. The announcement of the economic roadmap to 2020 coincides with China's biggest political event of the year, the National People's Congress. This year, the main focus is economic reform.
2015 was a major year for comprehensively deepening reform, the first year for fully advancing the law-based governance of China.
Financial watchdogs remain unconvinced that China's government will be able to handle the scale of economic challenges that lie in front of them. This includes shaking up state-owned enterprises, removing administrative controls, encouraging innovation, and reducing capacity in overproducing industries. Analysts say widespread social reform centered on housing and urbanization will also be needed. On Wednesday, Moody's downgraded the Chinese government's credit rating from stable to negative over worries imbalances in the Chinese economy were not being sufficiently addressed. The country's decreased spending power is also reflected in its smaller than expected defense budget. This year, it's due to rise by only 7 to 8%, breaking a 2-decade run of double-figure budget increases.
Move on to some of the day's other business headlines now. Gazprom has secured more than $2 billion in loans from the Bank of China. Russia's state-owned oil giant has been hit hard by Western sanctions, which effectively cut off its access to global capital markets. The 5-year deal represents the latest in China's expanding investment in Russia's oil and gas sector. U.S. gunmaker Smith & Wesson has reported a 61% jump in its quarterly revenue. Net sales of firearms rose more than 50% to $195 million. Analysts say Americans are buying more guns because they're concerned about tighter controls that could restrict their access in the future. And Samsonite has zipped up a deal to take over the high-end luggage maker Tumi for $1.8 billion. The world's biggest baggage group is trying to expand into the premium sector.
Well, finally, Kate, the world's most expensive train station has opened its doors in a very symbolic location.
Yeah, this is on the site of the World Trade Center in New York City. This station was 12 years in the making. It's finally opened its doors 7 years behind schedule. It cost $3.85 billion to build. That's nearly double the initial budget. The transit hub is expected to serve 250,000 people each day. But it has attracted quite a bit of controversy and quite a lot of remarks about the original design, certainly setting it apart from the other subway stations in New York.
You can see that. Okay, Kate Moody with the latest business news. Thank you so much, Kate, for being here. Well, joining us again is Oliver Farry with a look at the international papers. Hello.